So it's time now for our social story. This is where we give you a choice of 3 stories for us to take a deeper dive into this week's choices. How to invest with the markets in such turmoil, the Menendez brothers' fight for resentencing, and the chaos some people went through just trying to get to Coachella. It was close, but how to manage your money in this market amid the trade war came out on top. So with that in mind, let's bring in Jessica Roy. She is personal finance and utility columnist for the San Francisco Chronicle. Jessica, good to see you. Thanks for joining us. To say it's been a roller coaster ride on Wall Street this week, I think would be the understatement of the century. But you had a column this week. In it, you said, and we'll quote it, "If you've got the stomach for it, financial experts say right now is the moment to sit back and not touch a thing." Explain to us why that is the case, at least for some people.
Sure. So I totally get why people are nervous about their money right now. Like you said, it's been a little turbulent, a little volatile the past week. But, everybody I've spoken to for this story and other stories, and that's financial planners, that's investment advisors, that's wealth and estate managers, they all said they are telling their clients the same thing, and they are doing the same thing with their money in the stock market, and that's leaving it alone. Don't touch it. Don't try to time the market. Leave it where it is.
Now, that's good advice, certainly for people of a certain age. It's a little bit different ball game for retirees or people close to retiring because they're depending on the money they've saved, for now. So what's the advice you're hearing for them?
Traditional retirement planning advice says that as you approach retirement age, ideally, you have already diversified. Ideally, you've got bonds and you've got cash. And right now, same thing, don't touch the money that's in the stock market. Be drawing down your living expenses from your bonds and your cash, if at all possible. If you did not do that diversification, if you were like, I'm riding it out in the stock market, the people that I spoke to who are retirement experts said just withdraw the minimum living expenses that you need right now from the stock market, and otherwise, same thing, try to leave it alone.
Yeah, I don't know if you can see, but just as you were speaking, we were showing some video of folks playing pickleball and guitar. And I could certainly like to do that for just a little while in the midst of all of this. We've heard the term buying the dip. We've heard that a lot this week. And if you're in the markets, you know it. But explain it to us, what it means. And is it a good strategy, particularly right now?
When it comes to the stock market, when it comes to any sort of asset, you want to buy when it's low and sell when it's high. But a lot of people, it's your money. You get emotional about it and people kind of panic. And if you're selling now, you're selling low, which is not what you want to do. But if you're buying now, if you look at the total history of the stock market, it has always had these cyclical dips and then it has always come back up and then gone to even higher heights. And so if you buy now, some financial advisors are like, it's kind of like you're getting a sale on stocks. I would say if you're thinking about investing, if money is just totally burning a hole in your pocket, you just have to make sure your financial house is in order. Do you feel great about your emergency fund? Do you feel great about weathering a potential recession in the next 3 months, 6 months, 12 months? And when do you need this money? If you need this money in the next year to live off of, I wouldn't put it in the stock market. But if you've got 10, 20, 30 years, if you've got that long horizon, it's probably a better time to buy than when the market is at record highs.
And just quickly, for those who get a little queasy watching what happened with the markets and they don't want to do anything, are there alternatives for growing your money during a time like this?
Yeah, there are a lot of alternatives that are, lower risk, but lower reward than what the stock market has historically performed, but guarantee rewards, things like bonds, things like CDs, and things like even a high yield savings account. You can still find ones online that are getting 3.5, 4%. And, that's money that's insured, that you're definitely going to get that return. And it's definitely going to be there when you need it.
All right. That's our social story for this week. Jessica Roy, thanks so much for taking the time. I appreciate it.
Thanks for having me.
Awesome.